All right, good morning, traders. TG Watkins here. How's everybody doing out there? See, it is Wednesday, FOMC day. So far, it's pretty much a snooze fest, as we expected things to be today. Yeah, that's kind of what's going on. Now, I think the basic idea, let me get this thing adjusted a little bit, is 75 basis points is baked into the cake. I think that is the thought. And then there's a little bit of talk about 100 basis points, but yeah, I guess the market doesn't think that's going to be happening. Partly for a couple of reasons. One, that would be too big of a shock. The other would be that it kind of shows that maybe the FOMC, Jerome Powell, that kind of don't have their things figured out, and something surprised them, and that's not a good look for them, basically. So I think the 75 basis point is probably where we're going to be at. All right, so with that, we can jump in and we'll take a look at some things around the market, see what's happening. As I said, kind of not much happening right now. The FOMC is going to be in a few hours, and we never really quite know what's going to happen there because we don't know how the market's going to react, and we can have our ideas, but sometimes it can be very surprising. So let me show you one time that I remember over here on the S&P, and I think it was right here, if I'm not mistaken. And if anybody wants to check what I'm looking at here, this was May 4th. I think May 4th, and then May 5th was the next day. And we're trading this a bit in through here and saw a bit of a long setup, maybe a bounce, something like that. And that was completely correct on that. The 15-minute time frame said yes, the hourly said okay, and we caught this nice bounce up there. Pretty sharp move, like straight up, all that kind of stuff. And what would have been nice is to trust the longer term signals. Number one, price was outside of the third ATR. Number two, we had price over the 50, the downtrending 50, while the Moxie indicator was below zero. So that was technically an inverse trampoline move. And what happened was on FOMC day, that thing shot right up. We took a trade on it. Should have just gotten out right there. We waited for it to see if there was any kind of follow through the next morning. The next morning, price opened just slightly down and then proceeded to implode. And we had to quickly scramble, get out, break even, something like that. And then it just continued its pace down and down lower. So that's just kind of an example of somewhat recently of what could happen out there, and just to have understanding of what can happen during an FOMC day and the day after. And I partly mention that because, in one way or another, I've been, oh, hi, the cat's here saying hi. So in one way or another, I do see that price is a little bit stretched to the downside, and there could be room or opportunity for a bounce. But really, I do kind of view it as a bounce. We've kind of seen that here. We tried taking a little trade to the upside. I think we got about 1% out of that one. And we got out just in time because I figured, again, there must have been a news item, I think it was. And we had price moving right up into the underside of a downtrending hourly 50 with the Moxie indicator below zero. So that one was also kind of like, oh, hey, that's obvious. And then this last something that we had was a fairly good short squeeze. But again, it was just that. So just the short squeeze. That was price moving up over the hourly 50. And notice that the Moxie indicator was below zero. I mean, even at peak right here, you can see that the Moxie indicator was still below zero. And then another thing I like to talk about this is that there was no positive divergence, which is, I'm showing this now because we are starting to see just a little bit of positive divergence. It hasn't proven itself. It hasn't kicked in, but it is something to observe. And for those of you who are trying to learn and get used to the Moxie indicator and see some stuff, this is what I talk about when I talk about positive divergence. You see how we have lower price, but you see how the Moxie indicator is higher. That's the divergence. But if we look at before this last move, there was no positive divergence. You could basically see here price went down, price went up, and you could see that the Moxie indicator went down, the Moxie indicator went up. There's no divergence. And so that was also another clearer sign that that up move was really not supported. You want the indicator to basically lead price. You don't want price leading the indicator. You don't want the tail wagging the dog, that kind of thing. And so we see that, and we got price to completely drop back down. It was very nice right through here, continued to hold underneath the 15-minute 50 with the Moxie indicator still below zero. And that gave us that nice drop that we got. So from there, price got a little extended to the downside. There's a bit of a gap here between price and the 8 EMA. There's also a bit of a gap here between price and the hourly 50. And oftentimes price doesn't like to have gaps, have spaces, be too far away from moving averages, whether it's on the upside or the downside. And so that's why right now we've been seeing a bit of a correction with time as opposed to a correction with price. And a correction with time is kind of exactly that. Like, let's just wait for things to line up to go from being oversold to back into normality. And let's just wait for the moving averages to come down and meet price. Whereas fixing with price is here, like where price actually moves to meet the moving average, or price moves kind of like we saw just the other day with that little bounce to fill that gap. And that's fixing with price instead of time. So yeah, it's going to be interesting to see what happens with the FOMC. And let me just maybe follow up on that thought that yes, there is some positive divergence here, but it's not confirmed yet. We don't see anything we can really run off of. And just to show, let me go over here. And just to show you that divergences and positive divergences can be around for a while, you can see that, let's see, we're kind of like right through here. You can see some divergence, but price just, bounced, but then came down. Really what you want to be seeing is you want to see this on lower time frames. You want to see some more hammering out of a bottom and through here. And then really you want to see the Moxie indicator get to or over the zero line. That doesn't necessarily guarantee anything, especially since we're in a bear market right now. You need to use the rest of the time frames to confirm things. Just like here, you can see price. You could actually see a bigger one, price down, Moxie indicator up. There was some positive divergence. We did get an up move, but it didn't hold. So despite the Moxie indicator crossing over zero, you can see right here, price did not hold the hourly 50, and so you had to do it all over again. But that did create some more positive divergence, and then there you go. There's your next Moxie price trigger. So you get the signals, and then you need to look for confirmation. That's kind of how we work with things, and that's why I'm like, I'm not sure if this is really going to do too much. So that being said, the heinous here, yeah, let's see, yeah, strange days for sure. I saw you guys kind of talking a little bit about Apple. Let's see, yesterday, Apple, Tesla, and UVXY were green. Today, all three are red. I like that the latter two are going red. More chances to jump in. Yeah, welcome to this interesting market. We have been seeing, bifurcation, basically. We've been seeing things all over the place, when we saw Microsoft, Amazon, Apple, the market, the indices moving down, I was seeing names like Foot Locker and DKS, and I'm trying to think of the other names. Weird names, small caps that really didn't seem to have any reason to go higher were going higher. And so it was very, very strange. I think most of them ended up kind of just chopping sideways, so that the up day or up 2 days was really just kind of chop. And so, yeah, we're seeing it's a little bit challenging right now. The market doesn't have a clear picture. I think a lot of people are waiting for the Fed and see what they want to do about that. But really, I think if we really just kind of think about this a little bit and we stand back, yes, the put call ratio is really high. Yes, there can always be a short squeeze and short covering. And yes, we could be at support and there could be a bounce. But if we look at the overall trend of the market, the economy, and what's going on, we know that the Fed is really trying to take inflation down. And we know that they are raising interest rates. And we know that we're in a bear market. So other than kind of the occasional bounce and stuff, I don't really see where this is an environment where people are going to be willing to get bullish and actually put money into things. On the whole, overall, yes, there will be names that stop going down, and so they actually start moving up. But it's going to be challenging to figure out which ones those are, and honestly, even to trust them. I would have a hard time with that. All right, so Sonny, you must have a friend over on YouTube. So MDB is being asked about. I saw you talking and checking him out earlier today. So you and I and the rest of the Moxie group have been talking about MDB for quite some time, even all the way back here. And I remember the guidance was, yeah, just keep hanging on. It should be a short. And the reason we were saying that, let me move this one over here since we're talking about it at this moment. So the reason why we were talking about this short was the 50-200-50 maneuver, and that worked out perfectly. And then the next decision was earnings, and you decided to hang on to that, probably because you've been seeing a lot of other things that on earnings, and again, tech on earnings, not doing well. And so that was a good roll of the dice. It pretty much worked out also on the hourly chart. You can see here, price was over a downtrending hourly 50. The Moxie indicator was below 0. And then it basically continued and carried to the downside right there on the hourly chart. Earnings slammed it down. Again, with the oversold situation, and this is what I was talking about just a minute ago with the market itself. Oversold, oversold. Way outside the moving averages, big gap, all that kind of stuff. And so just typically there is some sort of reaction to that. You know, the whoever is short is going to take their money, so they have to buy back in order to get out of their short. So that creates some buying pressure. And then maybe some algorithms come in here and they look and they see a technical double bottom, so they buy for a little bit. And they also see that there's a gap here between the moving averages, and so they buy. So yeah, there's a reason for a little bit of a reaction bounce. But then that reaction bounce kind of fixed itself. It came up into the moving averages. It came up into a downtrending hourly 50 with the Moxie indicator below 0. And then it continued to roll over again. And I think that is basically where we left each other off. Was I think it was something like that. Basically, you got out right about there, and I just said, in this market, I have been seeing that when things get really oversold, they do tend to bounce fairly hard. And just take your money. Take your money and run. In this market, it's really hard to carry a trend. Price has gone down a little bit further, but the same thing. I'm still seeing that this is very oversold, and we're back again outside of that 30 ATR and the 8 EMA. Yes, there is some divergence. Don't know if it's going to work yet, but there is reason for maybe this thing to kind of chill out for a little bit. Of course, if the market falls apart, it's going to keep going lower. But if it doesn't, then, it looks like it's kind of getting to a point where it may not really want to be going down too much further at this moment. Maybe later, but right now, maybe a little bit rough on the short side. Might be trying to push a little too much on that. Let me see what and then if we also look here, let me keep my cursor right there. You can see that there's a lot of price congestion right there. And you can see we have price right there. So not only do we have a double bottom kind of near term, we also have price coming into this congestion area. So I just would be careful about that and make sure you have your stop set. Don't give back too much. And then also don't try to keep pushing something. So if you want to initiate a short here, you're going to really probably need some market support in order to do that. I would look for a fresher opportunity in order to try and catch a new short if that's what you're going to be doing. Yeah, Arvin, yeah, Fed wants the market to go down, but looks like stocks are holding up. Yeah, I see many divergences. Yeah, I see that too. Now, the one thing that's interesting, I keep looking at the UVXY and the VIX. I don't have a position in this. We've taken a couple in and out, and I'm waiting for that kind of big move. And the only couple of things that I can show in through here is that, so kind of going back to MDB even, and going back to how price was oversold. The idea still applies even to the UVXY. You can see the UVXY from this point had a really big move to the downside, like whoosh, right? That's kind of what MDB did. It gapped down, bounced a little bit, then went even lower. And what you'll notice is look how far price got away from that moving average. Even the UVXY got oversold. And what you'll notice is that in one sense, and I'll take one side of this and I'll take the other side, but what you'll notice is that the UVXY is basically flagged sideways into the daily 50. So if the market wanted to go up, this is me taking one side of the equation, if the market wanted to go up and the UVXY was going to be part of this issue or situation, we could be seeing maybe that the UVXY is going to run into a downtrending daily 50. That daily 50 is going to hold, and we're going to see UVXY price continue lower. And that might be expected from a normal stock or anything else like that based on how moving averages work and all that. All it was an oversold move. It flagged sideways, fixed its oversold situation, and then it's going to continue going lower. That's a possibility. Now, on the other side of it, it went sideways because, well, this is UVXY, so people are hedging. They're protecting because they see something happening. Maybe the FOMC today with interest rates. And what could be happening is this thing is actually setting up to pop over the daily 50. Because remember, the first move versus second move, at some point, if price is going to go up, it will have to someday meet a downtrending moving average and have to get over that moving average. And so that's possibly what could be setting up here. And I say that because I do see that the 8 is over the 21 on the daily chart. So those moving averages have gone positive, have gone bullish. The Moxie indicator has gone bullish. Sam's high-low indicator has gone bullish. And if we look here on the hourly chart, there was a trampoline move, and there was a potential trampoline move right in through there. And then the other thing I'm looking at is noticing that it has flagged for so long and remained somewhat steady that the hourly 50 is over the hourly 200. Again, with the bullish situation. So on the daily chart, we have the 8 over the 21. We have the fast moving average over the slow moving average. On the hourly chart, we have the 50 over the 200. We have the fast moving average over the slow moving average. And there could be the idea that this thing is just flagging sideways, finding support until it moves up. So we don't have that answer yet. These are all potential ideas. Either side could be happening, but I'm prepared for either side. And we need to just see how the market wants to respond to the FOMC today and then probably into tomorrow. Arborist. So do I watch the monthly, weekly, daily? First of all, I watch all the time frames. I don't really day trade, so I don't watch too much of the 5 or the 2 minute. But when I set up a trade, like I know when I'm talking to you guys, I'm usually only looking at the daily, hourly, or 15. But when I set up a trade, I'm looking at the monthly, the weekly, the daily, the hourly, and the 15. I have it all on my one screen, so I can use my cursor and I can see where I'm at, and I need to know where is price on all the time frames. Because if I'm only looking at, say, the daily or the hourly, I'm missing what the weekly and monthly are looking like. And it's important to know what those those time frames with those moving averages look like, so that I know I'm not running into something. For example, let me show you. Yeah, that's what I wanted. So let me show you. Gosh, I think Tesla. Now, maybe Tesla is bullish. Maybe it can do a little bit more, and maybe it looks okay on the daily or the hourly chart. But if I open this up to the monthly and the weekly, I'm noticing that price is basically moving up into a downtrending monthly 10. And I might not know this only looking at the daily or the hourly. And this could be important because even if we look at, I think it was Crowd, if I can type these properly, CrowdStrike. Yeah, so look at Crowd. You can see the same thing. Like, look right there. You see how price was able to just barely push past the monthly 10, but then it got rejected and went down. There's a possibility, since we're 21 days into a month, that candle bar on Tesla could turn into a candle wick if price comes back down in the next 9 or 10 days. So that's what I'm looking at and saying, yes, price can push past these moving averages, but then be careful and watch what actually happens when those bars close. And since this is on a monthly time frame, the month has not closed yet, so there's still possibility. And that's what I'm saying is important, is to look at all the time frames to see if there might be some issues on some higher time frames. And then, yeah, Arborist, as far as the open, high, low, you can see that my bars are grayed out, so I don't necessarily care too much about whether it was a red candle or a green candle. Yes, that can be important. Sometimes I'm missing some information because of that. But more importantly for me, I really just care where is price in relation to the moving averages. And so that's why I grayed out my bars, so that I can see moving averages more cleanly and crisply. And so that's what I do. I think that's just my general principle and how I look through all these kind of things. Let's see. Do I trust WM? Let's see. Let me look at the higher time frame again. This is what I do. You go through the higher time frames and you look at stuff. Well, actually, the monthly and weekly don't look too bad. Of course, we always need to prove and verify that over the course of time, because this could roll over. This could be negative divergence, and this could turn over someday and just careen on down. That's a possibility. But honestly, for basically trying to hang, look at that, you're actually managing to stay above previous highs. That's not looking too bad. So the higher time frames look all right. Let me get down here on the lower, daily, hourly. And what I see right now is, you can see that from earnings, price got pretty overbought. It was very extended. And look how far price was from the daily 50. Now, instead of pulling back all the way to the daily 50, what it do? It basically flagged to the daily 50. Look at that. So not too shabby. Honestly, not too shabby. That's not looking too bad. That appears to be some pretty good relative strength. The Moxie indicator is still above zero. You got a squeeze going on. And even here on the double bottom on the hourly chart, you might have some positive divergence coming into there. Let me then first show you the idea of an inverse trampoline move. So this is how the Moxie indicator can help keep you out of false longs. So not necessarily a short, but a false long. Here is price over the 50. Notice how the Moxie indicator is not above zero. So remember, price should not be over the 50 if the Moxie indicator is below zero. It's called an inverse trampoline move. And so that would have kept you out from going long here and then having to deal with that pullback. The Moxie indicator was not ready. And same as I told you before with the market, look, there was no divergence. Price down, price up, Moxie indicator down, Moxie indicator up. No divergence. The indicator followed price, price followed the indicator. You guys see that? It's very important to see that with the Moxie indicator. So where we see divergence, though, is now we see a true double bottom, but now we see a higher low with the Moxie indicator. That's at least the beginning of positive divergence and something you want to be seeing. So now if this continues to work out, if it continues to be bullish, if it confirms, this is some good stuff that you want to be seeing. So I think it needs a little bit more time, but yeah, this looks like a decent something that amazingly might actually be holding up compared to what the market's doing. This looks like a fairly good bull flag into support. And now it's just a matter of time to confirm whenever this thing's going to work. So yeah, good call. Nice, Mike. We'll have to see. We'll have to see though. Susan, no, biotechs are real tough. Let me show you ALT. I tried trading this one a little bit. It went well once and then it didn't go well the other time. And then when this happened, we were just not even in it. But I think this was some news, some FDA trial. And of course, this is the problem with biotechs is that they basically live off of, yes, no. Did it pass? Did it not pass? Did it get approval or not? And when that happens, they can explode to the upside or they can just drop to the downside. And we won't know this because we're not on the inside. We're not following these trials and we don't even know when these things are going to be happening. Now, in this case, I will say the Moxie indicator actually did a good job calling this because you can see price up, Moxie indicator down. Here's your Moxie price trigger. And then you could actually see it was very, very red. And you could see price got underneath the hourly 50 with the Moxie indicator below zero and did a bit of a trampoline move right there, inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. Now, would you have known what was coming next? Probably not, but the chart did communicate the next move as it so happens. And the next move was some trial FDA thing, probably didn't get approval or delayed. And you can see that just instantly, overnight, price dropped like that. So no, I mostly don't like to deal with biotechs for that exact reason. So yeah, I know it's well, Susan, also right now, I mean the markets are very challenging. We are in a bear market and things are going every which way. So trust me, things get easier when the market is going up and when there's a general theme of things getting back together and back online and we can point out winners and leaders. Right now, everything is just kind of doing its own thing. It's very, very challenging right now. Yeah, I know it's difficult to stay engaged and looking for corners of the market to play. I get that. Yeah. Moxie is not available for Fidelity right now. We have it on Thinkorswim, we have it on stock charts, and then we have it on TradingView. So if anybody's interested in those, that's where we have it. We are working on a couple others, but it takes time to kind of get this thing together and then test the bugs and all that kind of stuff. So sorry, not on Fidelity yet. So JD, kind of with that, so LabU would be a decent way of playing something, biotechs generally, without having to deal with the singular stock ticker risk of approval or not approval. But right now, I don't see anything. LabU actually looks a lot like ARK Invests, to where yes, we've seen a potential trampoline move on the daily chart, price below the 50, but the Moxie indicator above zero, potential. But I don't really see anything yet here on the hourly. Yes, there's potential divergence, but nothing is kicking in yet. The 8 is still below the 21. Price is still below the 50. The 50 is still in a very, very strong downtrend. So I just don't really see anything here. So it's all these potentials, but honestly, some of these names could just end up going sideways for a very long time. You know, I think if we, let's see, Roku is one I kind of keep talking about. There's the potential that even though maybe you see a bullish setup here, or a bullish setup there, or double bottom, whatever, and maybe it works for a day or two, there's the potential that you run into something like this to where, you know, maybe it doesn't implode, but it also doesn't really go anywhere. It just goes sideways for a while. LabU might be doing that. ARC might be doing that. You know, if we look at ARC, you know, just I see potential, but nothing has really kicked in yet. You know, I see the potential trampoline move right there, but it's not happening yet. So we're gonna have to wait and see if it works out that way. Otherwise it'll just keep failing and going back down. I saw a 50-250 maneuver and it worked for a day, but continued to get rejected by the hourly 200 and then failed the hourly 50. So that didn't work. We didn't try it, but it was something I was talking about, kind of showing people. So a lot of potentials. We're gonna have to kind of wait for the market and the Fed to do their thing today and see what's happening. Oh, 4-2, thank you. Yeah, you know, this is the way that I trade and the way that I teach has really just kind of grown. Well, from my engineering brain, how I see things, and I really just studied the market, and I kept trying to put the pieces of the puzzle together. I did have some help from other people, you know, who were in my position, the mentors that I learned from, and I learned a little bit from a lot of different people. And that's the same thing with you guys. Hey, I may not be the end all be all for an educator for you guys, but maybe you like the way I see some things or how I talk about some stuff, and you'll take little pieces and then you make your own trading system. And that's really the name of the game. And so that's how I kind of figured out my stuff, is I just kept looking around, and I started to see things. And then I started to see some consistent stuff. And that's how I was able to come up with some of the terminology or the way I view things or just how I have my chart set up. And it's been a learning curve. And I think that anybody new to the market's going to have to kind of realize if you want to be in here, it's going to take some time, it's going to take some diligence, and you need to stick with it. And it's not going to be a straight learning curve. It's going to be all over the place, just like the market. So, you know, be patient, have tenacity, stick with it, and you know, find people who can help you based on how our trading styles are. You know, if I can help with some stuff, great. If any of our other teammates can help you, great. And then you put it together and figure out a way that works for you going forward. All right, guys. Well, that's going to be my time. For the Moxie group, I'm going to be in the options room, I think, in about 30 minutes. And so I'll do a broadcast over there. And I'll see you guys shortly. Everyone else, thanks again. Have a good day. And we'll see about the FOMC and